Hello and welcome to Macro Decode. The crisis in Iran has reached a critical point after the reports of the death of Iranian Supreme Leader Ayatollah Khamenei. The tensions around the Strait of Hormuz, as well as the conflict in the region, will have a significant impact on India's crude and natural gas supply, its trade, and inflation. To talk more about this, we have with us Prashant Vasisht, Senior Vice President and Co-Group Head, Corporate Ratings, ICRA. Welcome, sir.
Thank you for having me.
What is the situation in the Strait of Hormuz now, and how important is the strait in our crude and natural gas supply as well as trades?
Yeah, so about 20 to 21 million barrels of oil, accounting for about 20% of the global petroleum liquids consumption,
Yeah.
is routed through the Strait of Hormuz. This is now an area where there is a lot of active kinetic action, and accordingly, what we hear is that the Strait of Hormuz, along with the Red Sea route, are both closed. Now,
Okay.
about 50% of our Indian imports of crude oil and 54% or 55% of our LNG is routed through the Strait of Hormuz. And if this situation is prolonged, where no ships can sail through safely through this strait, then these supplies could be impacted.
Okay. Right. Uh, do we have some alternate routes, avoiding the Strait of Hormuz? And can you tell us like how viable they are? Probably they will also increase our freight costs and shipment time. I mean, how good are these routes?
So there aren't many alternate routes. There are a couple of pipelines, but they can accommodate only a fraction of the crude oil that actually passes through the strait.
Okay.
So, because a lot of these countries straddle along the strait, there aren't any alternate routes for routing this crude oil or LNG. So, in
Oh.
that sense, there could be a supply situation where supplies are restricted.
Apart from this route, is there any way we can probably bring crude oil like through Saudi Arabia or somewhere else?
No, not from these countries so much. Then there are alternate sources, which would have to be other geographies, like they say the US,
Okay.
South America, Africa, etc., which would have, but in case this crude oil is this route is disrupted for a prolonged period of time, crude oil prices would go up. In which case, even if we get alternate supplies, these would be at higher prices and higher freight costs, which would escalate. Which would
We actually have been increasing our procurement from Middle East, Venezuela, and US after the Russian sanctions. Recently we have been decreasing our crude oil import from Russia. So how will that escalate our crude oil import? Will
yeah, certainly. Crude oil from the Middle East, just purely in terms of freight costs, because Middle East is in our proximity.
Right.
Crude oil from the Middle East costs about 40 to 70 cents per barrel, whereas from the US it can cost as high as 2.5 to $4 per barrel.
Right.
As the freight rates also are very volatile.
Yeah.
Now, other things being equal, this is the freight cost differential alone.
Mm.
But here we are talking about a large part of the global supply itself being disrupted. And if this continues for long, then it could have huge, then it could lead to higher crude oil prices, which would mean not just higher freight cost, but also higher crude oil prices, even if crude is sourced from other locations.
Okay. So, in your opinion, how much increase in crude prices are anticipated in the near and medium term? And how will this impact our inflation?
So, see, it is very difficult to quantify how much could be the impact now since the build-up started or the tension started. That is about 2 weeks back. We have already seen crude oil prices going up from about $65 a
Okay.
barrel to about 72, 73 now.
Yeah.
And depending on how the situation evolves, what are how long this prolongs, and this hugely important energy choke point is disrupted, that will decide the future course of crude oil prices, I believe.
If you consider the previous tensions that have happened in the Middle East region, how much can the crude oil prices move up? in the near to medium term, sir?
Okay. So see, it's very difficult to predict, given that this is a evolving situation.
Yeah,
And if you look at the example of 2008, when a crude oil tanker and a military vessel went, head on, came head to head, we saw that crude oil prices jumped to about $140 per barrel.
yeah,
Uh, Fortunately, this time we are seeing there was about $7 to $8 increase in the crude oil prices since this whole situation started.
right.
Over the past 1.5 days, crude oil prices have stayed in that region of
Okay,
$72 to $73 per barrel. But
right.
overall, how the situation develops would have an important bearing on the crude oil prices. It will be difficult to predict as such, but as I gave you an example, crude oil prices shocked everybody with that $140 mark in
Yeah,
2008.
yeah.
So we'll have to see how things develop here.
Okay. And what about the trade of non-oil goods with the Middle East? We have a very good trade with this region also. Which goods are likely to be impacted?
So I believe Middle East also we have a very active trading relationship besides crude oil. The huge diaspora lives there, so there are a lot of consumer goods that are transported along with gems and
Yeah,
jewelry, textiles, etc.
yeah.
So given that these two important routes are now closed or at least temporarily closed as of now, these all could also be impacted.
So apart from the trade, we have a very large diaspora in the region. I mean, jobs are likely to be under threat. And what about remittances? If you look at the past similar situations in the past, what could be the trend in the remittances flow into the countries?
So remittances would probably spike in the initial phase when people send out money to their native country, which is India,
Right.
and then there could be a dip depending on how long this war escalates, how
Yeah.
long this war continues. So
Right.
that is probably what we've seen in the past.
Okay, okay. And overall, when you look at, if this crisis prolongs and we have, the crude supply being disrupted, what could be the larger impact on the economy?
Sure. So see, one is that higher crude oil price the first impact would be on the import bill.
Right.
For every $10 of increase in the crude oil price on an average basis, the annual impact on the India's crude oil import bill is about 13 to $14 billion.
That's right.
Yeah, so that is one. In case crude oil prices become very high, then the oil marketing companies could see their margins being compressed
Hmm.
because of marketing margins being lower. And this could also impact, inflation. And if petrol or diesel prices increase at pump level, then this could have an inflationary impact as well on the economy, given that these fuels are widely used for transporting goods. So that those could be some of the impacts that higher crude oil prices would entail.
We have been, reducing our imports from Russia after the sanctions and, our interim framework for trade deal. Uh, do you think we will have to go back to our Russian crude oil, once there is a disruption and the oil from the Middle East, becomes very difficult to, procure?
So see, as of now, two large suppliers of crude oil from Russia have been sanctioned by the US.
Right.
So Indian companies have been compliant with the sanctions. So whatever is the non-sanctioned crude, yes, India could procure from those suppliers.
So I think we are actually looking forward for more uncertainty. We already have been seeing a lot of uncertainty because of the disruptions in trade. And now with this tensions in the Middle East, we will probably be seeing a lot more uncertainty. With this, thank you for coming for our show, sir. It was really insightful to have you with us.
Thank you.